In the world of investment, free cash flow ETFs are making waves, and today we spotlight one such game changer, the VictoryShares Free Cash Flow ETF, also known as VFLO. This innovative ETF made its debut in June 2023, and since then, it's been making quite the splash. Outperforming similar ETFs, including the well-known iShares Core S&P 500 ETF, VFLO is not just keeping up with the pack, it's leading it. But what's the secret to VFLO's success? It's all about the strategy. VFLO seeks to provide exposure to high-quality, large-cap U.S. stocks. But not just any stocks. We're talking about stocks that trade at a discount, but still have promising growth prospects. That's where the real magic happens. And the numbers don't lie. With a portfolio of 50 holdings, a weighted average market cap of $64.6 billion, and a strong focus on the energy sector, VFLO is making its mark with impressive earnings and free cash flow yields. But it's not just about numbers. It's about the bigger picture, too. VFLO is demonstrating strong capital efficiency, with impressive returns on assets and total capital. In a nutshell, if you're an investor with a focus on free cash flow, VFLO is a promising player to keep on your radar. With a healthy portfolio mix and strong capital efficiency, VFLO is a promising player for investors, with a focus on free cash flow. VFLO's strategy is based on free cash flow yield and growth scores. But what does this mean for the fund's performance? Let's delve into it. The VictoryShares Free Cash Flow ETF, or VFLO, boasts a robust portfolio of 50 holdings as of December 6th. It's interesting to note that the energy sector has been a significant contributor to this fund, reflecting the sector's potential in the current market scenario. The fund's strategy of focusing on free cash flow yield and growth scores has resulted in an impressive portfolio that doesn't skimp on quality. This approach has led to a healthy blend of high-quality, large-cap U.S. stocks trading at a discount, while still presenting favorable growth prospects. In terms of market capitalization, VFLO has a weighted average of $64.6 billion, a figure that signifies the scale and stability of the companies in its portfolio. A noteworthy aspect is that all of VFLO's holdings are profitable, indicating a focus on companies with strong financial health and solid business models. What's more, VFLO demonstrates strong capital efficiency, as evidenced by its impressive return on assets and return on total capital figures. These metrics show how well the fund's holdings are using their resources to generate profits, a key factor for long-term investment success. However, it's important to acknowledge that no investment is without its risks. In the case of VFLO, there are vulnerabilities in terms of negative forward revenue growth rates and forecasted declines in EBITDA for some holdings. These factors highlight the need for careful consideration and thorough analysis before diving into any investment. Despite some vulnerabilities, VFLO's emphasis on value and quality without sacrificing growth makes it a noteworthy investment. The fund's performance and strategy offer an intriguing option for investors looking to add a free cash flow-focused ETF to their portfolios. Now that we understand VFLO's strategy and performance, how does it compare with other ETFs in the market? Let's delve into that. In the world of exchange-traded funds, there are many players, each with their unique strategies and offerings. To gauge VFLO's standing, we'll compare it with some of the top U.S. low-volatility smart beta ETFs, as identified by QAI's deep learning algorithms over the last 90, 30, and 7 days. Starting with the Invesco Russell 1000 Low Beta Equal Weight ETF, or USLB, it's rated as the best ETF. This ETF, like VFLO, focuses on stability, but through a low beta strategy. It aims to provide exposure to companies with lower total risk or market sensitivity. Next, we have the Invesco S&P Midcap Low Volatility ETF and the Invesco S&P Small Cap Low Volatility ETF, both rated as good. These funds are designed to offer exposure to mid and small cap companies in the US, with an emphasis on low volatility. Then we have the Spider Russell 1000 Low Volatility Focus ETF and the Invesco S&P 500 Low Volatility ETF, both rated as caution. These ETFs follow a similar low volatility strategy, differing primarily in their focus areas. Finally, the VictoryShares US 500 Enhanced Volatility Weighted ETF and the iShares Edge MSCI Min Vol USA ETF are rated as poor, while the Spider SSGA US Large Cap Low Volatility Index ETF is rated as the worst. These ETFs also aim to minimize volatility, but their recent performance has been less impressive. In comparison, VFLO's distinctive free cash flow strategy has led to impressive earnings and strong capital efficiency. While it doesn't directly compete in the low volatility space, its focus on large cap US stocks trading at a discount with favorable growth prospects sets it apart. While VFLO stands out in terms of its free cash flow focus, its performance relative to other ETFs provides valuable insights for investors. In conclusion, VFLO's free cash flow focus and robust performance make it a compelling choice for investors. This fund, which debuted in June 2023, has been outperforming its peers by focusing on high-quality, large-cap US stocks that are undervalued yet have promising growth prospects. One of VFLO's key strengths is its selection process, which is based on free cash flow yield and growth scores. This has resulted in a portfolio of 50 holdings, all of which are profitable and have contributed to the fund's impressive earnings. The energy sector has been a significant contributor, further underlining VFLO's strategic approach. However, it's important to keep in mind the potential vulnerabilities, such as negative forward revenue growth rates and forecasted declines in EBITDA for some holdings. These factors underline the importance of taking a comprehensive and informed approach to investment decisions. So, whether you're a seasoned investor or just starting out, VFLO offers a unique blend of value, quality, and growth. It's a testament to the power of free cash flow-focused investment strategies, and a shining example of how to navigate the dynamic world of ETFs. Stay on top of the investment game by subscribing to our channel for more insights and analysis. Remember, knowledge is power in the world of investment.